Francesco de Rosenzweig, former Deputy Minister of Foreign Trade for Mexico and a Fellow of the Wilson Center. And on my left, Fabio Jose Fagundes, if I'm pronouncing correctly.
Very good Portuguese.
The Chief of Financial Products and Services for IDB Invest. And Fabio, I have to make a confession. When I saw that, I had to Google it. And then I realized, oh, you mean the Inter-American Investment Corporation. Okay, I've heard of that one. But I understand it's a rebranding. Can you tell me what the logic behind the rebrand is?
Thank you, Richard. Good morning to you all. It's a pleasure to be here. As many of you heard, the Inter-American Development Bank created the IDB Invest about 3 years ago. So the decision was taken by the 48 shareholders, the countries that are the shareholders of the IDB Inter-American Development Bank, to create this unit called that last year we rebranded to IDB Invest. And the focus was we needed an entity that would support the development of the private sector in Latin America and the Caribbean. So IDB Invest received a $2 billion capital increase. And now we are about 500 people dedicated to the private sector of Latin America and the Caribbean. Presence in now 26 markets, leveraging, of course, in the 60-year-old Inter-American Development Bank, and now their offices in the region. It's important to emphasize then what is the IDB Group now. It's a formation of 3 entities. One is the IDB, the 60-year-old institution that all of us is well aware about. Their focus is on the sovereign side, financing projects led by sovereign and with sovereign risk. And of course, all the research and the policy advising and the regulations, the best practices across hundreds of partners across the globe that will support the IDB in advising the sovereigns in their best practices and financing their projects with sovereign risk. Then the second entity is what we call the FOMIN, the Multilateral Investment Fund. That's our innovative lab and our venture fund. And then the third institution is the IDB Invest, the entity that for the last 3 years, we now have a footprint of about 5 billion. Last year was a 5.2 billion footprint in Latin America and the Caribbean with about 70 projects in the region, ranging from, and that's again, focused on corporates, financial institutions, and sponsors in infrastructure, responsible for the financing of projects ranging from agribusiness to manufacturing to transport, energy, and so forth. So that's the new IDB Invest that the Inter-American Development Bank launched 3 years ago, and thanks for allowing me to share this very important development for the group. Thank you.
Thank you. Francesco, if I can turn to you. It's great timing for this conference, isn't it? Just with the rate hikes yesterday, the United Nations meetings. One of the key things that I'm trying to get my head around at the moment is the progress on NAFTA. It's obviously incredibly important for Mexico and more broadly for the region. What is the status and what's likely to be the outcome, do you think?
Yeah, thanks, Richard. Good morning. Well, as you know, Mexico is quite linked to the U.S. economy, the second trading partner just behind Canada. And these talks has been quite tough since 18 months ago. But last August 27, Mexico and the U.S. were able to get an agreement in principle with the aim to bring on board the Canadians a few days or weeks later. The truth is that this has not been the case, but for Mexico, it was very important to secure a preferential market access to the U.S. Our economy is linked in 83% to the U.S., so for us it was a major achievement. It's true that, as always, there are some areas of opportunities, some areas where Mexico was able to also have like a insurance policy when we talk about the automotive industry. Just to give you an idea, Mexico export around $400 billion to the world, and 81% is linked to the US. And out of those, 140 billion are related to the automotive industry. So the NAFTA was the main driver for the economic growth in North America, I would say, especially in Mexico. And having the possibility to keep this platform in place with all the challenges posed by President Trump was not easy. But I will say that just to highlight some of the major achievements or outcome, I will say that first, we were able to undo this sunset clause with a sudden death after 5 years. So nowadays, you can secure the trade preferences over 16 years. So once the new agreement is in place, there will be a chance to review the initiative 6 years later. And if any part decides to withdraw, the initiative will remain for another 16 years. So this is something that is not full certainty, but at least in the mid and long term, you have a better idea about the trade preference could look like. The second is that we were able also to secure all the exports in the automotive industry. Nowadays, we export around 1.7 billion US dollars. I'm sorry, 1.7 million of units, and we will have no tariff at all, up to 2.4 billion US units, even if Mr. Trump decides to impose tariffs under the national security principle under the US law. So this is something that for us was very important to secure. We have free trade. We are not facing any kind of tariff. And also we are able to keep also the ISDS or the dispute mechanism settlement to protect the investment in Mexico. For Mexico, the investment is a very major and relevant issue for our work and growth. So I will say that the main difference between having NAFTA or non-NAFTA with Mexico, in my personal view, will be keeping the Chapter 11 or the chapter that protects foreign investment. So this is maybe the most important issues. For the Canadians, there may be some others that are linked to the ag industry, especially to dairy, Chapter 19 for dumping procedures. And I will say that also the dispute mechanism settlement is very important for the Canadians. That in the case of Mexico, we were able to keep the one that is in place since 1994. So in general terms, I believe that the outcome is positive for Mexico. As always, it's a matter of how you sell things. And if you consider that for us, the automotive industry represents a large part of our exports, keeping a duty-free market access to the US was very important.
So you're sounding very optimistic about everything. Any concerns there?
Well, not so optimistic if you consider that the initial approach of Mr. Trump was to withdraw from NAFTA. At least we're able to keep our trade preferences. I would say one of the challenges that Mexico will face is that if the Canadians decide to not join the trilateral platform as it is nowadays, I don't think that it will be so positive, the outcome, because you will not have a regional platform, a regional chain of play that is being efficient and is one of the most competitive ones worldwide. Second, Mexico will face a challenge as well in terms that the Canadian may get a better agreement than the one that US negotiated with Mexico. And third is uncertainty, because even though that the initiative that was agreed in principle is expected to be signed on November the 29th, the truth is that we're eager to bring Canada on board. And if the Canadians do not decide that or consider that the deal is good enough, then my guess is that the signature of the new initiative may be delayed until the new administration in Mexico, and this may face some uncertainties that the new administration may need to consider. No? So I would say that I'm still optimistic. My guess is that after October the 1st, once the provincial elections in Quebec take place, the Canadians may do an approach that will allow them to get a deal that is also feasible for the Canadians as well.
The first keynote speaker tomorrow morning is from the chief economist of the Canadian Export Development Corporation, so I guess we put it to him then. Fabio, on Francesco's comments, first of all, in the Mexico-US context, do you agree? And broadly, repercussions elsewhere and potentially to other trade areas?
Yeah, absolutely. Thank you, Richard. It's important to think, of course, all of us, we are hearing about trade wars and frictions in trade agreements and so on. And then linking that point with the mediocre growth of Latin American and the Caribbean countries in the recent historic history, you can start thinking, okay, what can be done? What are the low-hanging fruits there for Latin America and the Caribbean? And what has happened in the past years and why that growth hasn't picked up? You know? So of course, when we compare with the emerging markets in Asia and what they have done in terms of capital accumulation, skills, labor, and total factor productivity of the markets in Asia, they have been able to grow at a much faster pace. So what has happened in Latin America and the Caribbean and why we haven't been able to follow that path in the past decades. And based on one IDB report that is public called Connecting Dots, published by the Integration and Trade Department of the IDB, one of the main reasons is the fragmentation in Latin America and the Caribbean. When we look at the Latin America and the Caribbean and at the region, we don't have one NAFTA. We have 33 trade preferential agreements. And that's, when you look at those that could be from Mercosur, Pacific Alliance, CARICOM, Central America, Andean, and so on, it's a very fragmented region that is not leveraging the close to $5 trillion market that we have with 600 million people in the region. And that could be compared to 50% of the Chinese market, 1/3 of the European Union, and 20% of NAFTA. So the region, the convergence that we need in the region and would bring potential gains that today we are not extracting because of that fragmentation.
But if you allow me, but maybe one of the reasons is that in the Latin region, I'm sad to say, but we are not so committed with free trade. So the intra-trade also in Latin region is quite low as opposed to the US, well, North America, that is around 50%. If you talk about Europe, is above 80. So I guess that one of the challenges is that our economies are not so open to free trade, to investment flows. Of course, we are a large reservoir of FDI, but as you well said, as opposed to Asia, we have not been so successful. So when we talk about free trade agreements or regional free trade agreements such as the Pacific Alliance, Mercosur, at the end you have like a different kind of initiatives that at the end may not have the same political or economical rationality behind. And that's maybe the challenge that we may need to consider when we talk about a more regional as America's FTA initiative, no?
Absolutely, Francisco. And why the IDB now believes that this is a low-hanging fruit? Why we haven't seen that before in the past 10 years? And why the region has been fragmented and divided, as you rightly said, closed markets, small groups, very not material, without a relevance. At least now we would have a head start. It means when you look at the region and the commerce between our countries in Latin America and the Caribbean, now about 90% of all the products and services that we sell is duty-free among our countries. So those actually agreements, they actually open up the commerce for those countries and in terms of products and services. Then when you look at the 3 countries, Argentina and Brazil, of course, are in the Mercosur, Mexico in the Pacific Alliance. The 3 of them are 2/3 of the GDP of the region. And in addition to that, when you put together the Mercosur and the Pacific Alliance, that's already 81% of the market in the region. So if those 3 countries, they align their interests in terms of creating what we could call the Latin American and Caribbean Free Trade Area, or LAFTA, for a better word, we actually could be extracting quickly a 9% gain in inter-regional trade in goods that will be used for the region's export, an average of 3.5% increase for inter-regional trade as a whole, and that's an average. So for Central America and the Caribbean, that could actually mean an increase of 21% of their agri business in the smaller countries in Central America. And finally, LAFTA could mitigate by 40%, and that's an important, if we think about an insurance policy. We have been talking about the trade war, about the frictions in the trade agreements across the globe, and what would be the potential consequences in Latin America and the Caribbean. And this potential LAFTA would mean an insurance policy to mitigate 40% of those potential negative impacts in our region. So that's, we see a moment to grab that low-hanging fruit and work together in the region to create that uniform group that will be relevant in comparison to other parts of the globe, and hopefully create that capital accumulation, the skills necessary to increase the productivity, scalability, and competitiveness of Latin America and the Caribbean in the world that we can see today.
It sounds like a very plump fruit, but I'm not sure whether it's low-hanging. Francesco, you've negotiated trade deals. Is it something which is plausible? Will we see it in the next 10 years?
I think it is. The challenge is to have the mindset in the mid and long term. Second, I would say that we have an issue because one of the successes of the NAFTA initiative or some other free trade agreements is that you always want to have market access to economies that has a large purchase power potential. No? So when you talk about the US, it's because you have a very strong middle class. Mm-hmm. And that's the challenge that we have in Latin America. We don't have a strong middle class that is able to have a purchase power that is so attractive as we would like to. Second, as Fabio said, the Pacific Alliance represents half of the total trade of the region, of LatAm region. So there was an intent, like a bit more than 10 years ago, to do this kind of approach, to have a Latin American agreement with the Americas. And we did not succeed due to some local different views. And the outcome was the Pacific Alliance. So if you see, the Pacific Alliance is integrated by Chile, Colombia, and Peru, and Mexico. So most of the Pacific economies are part of this initiative. And when it comes a global uncertainty, and if you consider that China is the first trading partner of Latin countries, with the exception of Mexico and Brazil, considering what our previous colleague just explained in her presentation, it's very important to consider the rate of growth of China and the impact that this may have in the regional growth. So I would say that it's very important to follow very closely the trade war, if it's possible to call it that way, from US and China, because the US, if it's not the first or the second, is a top trading partner of the LatAm economies. So my guess is that with this dispute between the two major global economies, is if China is going to try to have a much stronger position in the Latin American countries, and also, of course, I'm including Brazil and Mexico.
It's a very important topic, but I don't want to just focus on the trade. I actually had to pick up, Fabio, on something that you mentioned earlier about IDB investment and the entire group. Given all the political volatility, what are we, a week away from the Brazilian elections? We've just had the Mexican, we've got Argentina next year. And given all of the market volatility associated with that and the lack of market access, what can you do? You obviously can't solve the political problems. Can you solve the market access problems and countries being shut out from the market around this volatility?
Yeah, it's before jumping in the volatility in the market, just to agree with Francisco on the point of the Pacific Alliance. In this report from the IDB, it's mainly leveraging on all the success that the Pacific Alliance they have been able to obtain and replicate that, bringing in the other two nations, Brazil and Argentina, to attach it to the Mercosur. So that's why we see it as a potential low-hanging fruit there. Yes, indeed, Richard, you're absolutely right. When we look at the volatility in Latin America and the Caribbean, it has always been there. In all the 26 markets that we cover, 7 of them are under elections turmoils in the past 2 years, or have had those turmoils. More recently, 6 of them actually they have presidential elections. So Mexico just conclude their phase. You still have Brazil, the 7th of October, the first round. Chile, Colombia, Costa Rica, and Paraguay as well. So that volatility is still the political elections. They bring into the market uncertainty about whoever is going to take the lead and how they are going to define their policies. And we have seen that in the market. When you look at the DCM volume in Latin America and the Caribbean, has been actually half of this year has been half of last year. So we are by year end. And last year we have had about 140 issuances for close to 80 billion. Today we are at 60, half of it at 60 issuances and 34 billion in the DCM volume in Latin America and the Caribbean. Interesting to see as well that the market has been dry for 9 weeks, and last week we had 2 issuances adding about 2.3 billion in new supply after those 9 consecutive weeks of a dry market. So indeed, this is affecting the development and of our economies. Now, the IDB Invest is playing a role with, as I said, last year was 5.3 billion in footprint, 3.2 billion of our own capital, and about 2 billion mobilizing third-party funding. And what I mean by mobilizing third-party funding is not only syndicating with our partners, many of you are here, but also leveraging on our preferred creditor status to raise that confidence that we have always been in the region, thinking and planning for the long run, working with our partners in the region, being selective, with a very good track record in our credit portfolio. So many of banks, and it's important to add that about the volumes that we are mobilizing from close to 120 investors across the globe to invest in Latin America and the Caribbean with us. About 83% is funding coming from commercial banks across the globe. But we see an increase in the institutional investors, in the insurers, pension funds, and that's already 17% of the volumes that we are bringing in. And of course, that's where with instruments that we are creating in IDB Invest, and I can talk briefly about those instruments in a second, but the importance here is how to connect the assets that we have in Latin America and the Caribbean, infrastructure debt, corporate financing, trade finance for financial institutions, the agribusiness, corporate loans, and so on, very much linked to the development of those markets, with institutional investors and with banks and credit insurers across the globe. So the instruments that we need to put in place, that could be the B bond that is deriving from the traditional AB loan structure that multilaterals they have been used, is actually being able to bring institutional investors to the table. Credit insurance policies, many credit insurers, and they will actually say that some of the transactions that we are doing in Latin America and the Caribbean, and the risks that we are taking, they would only do with a multilateral, because of course we have that knowledge, the local knowledge, the offices, and our preferred credit status. The close relation with the governments, making sure that will be repaid at maturity. And then finally, we have seen many commercial banks now originating transactions in which they could have been doing by themselves with the market, but then because of the volatility, because of our umbrella, because of that preferred credit status, they prefer to bring in that transaction, invite the IDB to take the position of land of record in their transaction. So they leverage on our umbrella and they become a syndicated facility in which it's under the multilateral umbrella instead of playing alone in those markets with high volatility. So those are the type of solutions that we are putting in place with our global partners, as I said, commercial banks, institutional investors, and pension funds across the globe, to make sure that that volatility does not impact in the funding available to the development of the region and in the many projects that we are financing, from energy to transport to financial institutions.
Leveraging the finance without crowding it out on the one hand, which is always a risk for a development bank, or being the lender when the market can't finance it, which I guess is the other risk in getting that balance.
Absolutely. It's very important to assure that we are, the word that has been used in the market is crowding out. What we would like is to crowd in, and it's interesting to say that, try to define what I mean by those two words. Is, of course, the financing gap in Latin America and the Caribbean, and we have seen from hundreds of billions to trillions, and how much we need in terms of funding to finance those capital investments in Latin America and the Caribbean. And no multilateral or no country alone with the fiscal deficits that we have just heard can do it without the private sector, without the institutional investors, without bringing in to the region those that funding. So that's what we call about crowding in that funding together with us to invest in the region.
Okay. looking at the attendee list of this conference, I'm very impressed by the number of development banks, and quite a few of them are going to be up on stage over the course of these 2 days. So I think that's a topic we're going to be returning to over the course of this. Incredibly, we haven't got that long left, and there's several other topics that we should talk about, and I'm going to just plump for the largest one or two. Francisco, may I start off with Argentina? Actually, I don't know who wants to answer this. We just had the announcement of a $57 billion facility from the IMF. Does that solve the problem? You saw the poll up there?
Sure.
The poll up there was 50-50 divided. Are you going to be 50-50 divided, or is 57 billion enough?
We can ask Macri. We can ask Macri about his views.
If he was here, I would.
It's the major challenge now is, and we have seen the first panel, and the keynote speaker was basically describing the challenge of the fiscal deficit that we have in all those countries, and what we call, our economists at the IDB, they just published a report that is also available, publicly available, talking about a potential and the risk of what they call a sudden stop in net capital inflows. So when you look at the reserves and the trade balance of those markets in Latin America and the Caribbean, what is the risk of having that sudden stop because of the increase of interest rates? And there is a risk, and the impact in 2002 was of 40% of the Argentinian GDP. So what the Argentinian government now needs to be very close and paying attention to is to avoid that sudden stop of the net inflows in the country, to avoid that dramatic drop in that impact in their GDP. So I'm convinced that they are doing the best work they can to avoid that sudden stop.
Do the best they can. Is that enough?
Well, I think that I share the views of Fabio. I believe that the Macri administration is trying to do their best. As always, Latin America faces a lot of challenges, and Argentina is not the case. The main driver of this crisis, as far as I understand, is the fiscal deficit and the lack of mid and long-term policies. And this is a common problem in Latin America. So I will see it as an opportunity in general in the LatAm region. There's a lack of infrastructure and a lack of competitive finance. So that's when agencies such as IDB are so important to be able to develop infrastructure that is so needed. And when you talk about local finance, sometimes it's hard to be able to have access, no? So I will say that multilateral agencies are so important in trying to develop infrastructure, bring in, of course, the infrastructure that is needed in the mid and long term, but also helping to develop a platform that will allow you to have a diversified portfolio so you can manage better the hard times. No?
But how did you vote in that poll? A debt crisis in Argentina?
I don't know. When Macri won the elections, I thought that it was like a fresh approach. I thought that he was going to be able to turn the page. And it seems that there are a lot of issues that were hiding behind. And at some point, you need to solve them and to take the bull by the horns and to try to manage the different challenges. And of course, this is a very tough moment for them, but hopefully they will be able to get along in the next few months.
I like the optimism. We don't have much time. I have two questions I really want to ask, though. One is something, from a very European perspective, when you look at Latin America, so many of the headlines are about what's happening in Venezuela. And I guess two related questions on that. What is I can't speculate about what's going to happen within Venezuela, but what is the knock-on effect of that on US policy to the region? Or the Trump's response to Venezuela? And what is the potential effect on the region, do you think?
Well, I would say the first doesn't seem to be Latin America like the top of the priorities of the US administration nowadays. It's clear that the Venezuela issue, it's been around for many years, and every month is getting tougher. My guess is that at the end, one of the main export markets of the Venezuelan oil is the US. So I do believe that this is something that has allowed them to manage a bit better things, or to avoid having the situation in a worse situation. So it's a very, very difficult issue because, as you know, Venezuela every day is more isolated, not only from the international markets, but also to their traditional regional partners, such as Brazil and some other colleagues. And it's very interesting to see that a week ago or so, the President Maduro was having a summit with Putin, the Russian president. So at this stage, I do believe that maybe Venezuela is trying to get along with new partners, or to try to be closer to partners that can help the country to get some finance and some resources. But at the end, it's a very difficult circumstance because it's a country that is isolated, as opposed to Argentina, for instance, that, as you well said, it just received a finance of 57 billion, and it's a country that eventually will perform well. But in the case of Venezuela, things doesn't seem to get better.
No? Major social implications in the migration causes. The country is now thinking about a potential recovery in the future. What they will miss and lack for that recovery is their people, is their skills, is the migration is basically causing them to lose that brain power, and of course not only the social implications of families being divided, but also that brain power is now being distributed across Colombia, Brazil, and Panama, and many other countries receiving Venezuelans from all over. So that's one major concern for us, the social impact.
Yeah. Yes, not a lot that we can say about that, I guess. But final question, if I can. It's a real left field question, to be honest, but I know that it's something that IDB is very interested in and is trying to develop, is financing of residential mortgages, and specifically through the bond market. We're about to see the first transactions in Brazil using the European covered bond technique to finance houses there. In Europe, something like 30% of all houses are financed via covered bonds. What's IDB trying to do in that area?
Yeah, it's again, the IDB on the sovereign side is leveraging on the knowledge of our partners and shareholders across the globe. So France with Obligation Foncière, Phambrief in Germany, and so forth, cédulas hipotecárias in Spain. And all those markets are well developed, as you just said, with numbers. And if we can advise rightly the countries to further develop that in Latin America, that will be definitely a way forward in developed mortgage financing in Latin America. And it's definitely an area that needs investment, and considering the number of households and the deficit in households for our taxpayers in Latin America and the Caribbean. On IDB Invest side, what we have been doing to support that type of financing is, whenever we are financing financial intermediaries in the region, the use of proceeds is key to make sure that those finances are long-term, So the asset liability management of our partners, banks in the region, they are well matched. Without, of course, we are talking about long-term mortgages in order to be able to finance those houses for the mid-class and lower class that we have Latin America and the Caribbean. So therefore, long-term is important, and the right pricing is also important to create a sustainable market for financing of mortgages in the region. So, for example, one transaction that we hope to announce soon is a structured covered bond for a bank in Trinidad and Tobago. Of course, when you talk about frameworks and regulatory changes, that helps the creation of the market in a more effective way, because when you are structuring a covered bond via legal frameworks, assuring that the collateral is linked to the financing and you have access to that portfolio, then the costs to structure that and to vet all the components of that structure is higher than if you have already created the market with the right regulatory framework. So in IDB Invest, we keep financing those needs, and via the IDB sovereign side, we are pushing for all the regulatory frameworks required to create those markets.